Welcome to the weekly review of indexes and stocks. Let's dive right in. Over the last week, this has been Nasdaq. This little spot right here. As you can see from that entry point right there, where we've seen everything kind of start off from. Right, we'll show you what it's going to look like right here, actually, on the long-term Nasdaq chart, right? So there it is. That's off the daily. There we go. Okay, so what I see happening here over the last 36 days is what happened here for 36 days, right? And just to show you a better understanding of all that, right? This aqua line, these diagonal Fibonacci channel lines, this one, that's been where support was hit the first time it hit this low, and this is where resistance is being hit this time around, right? So support is way down here, resistance is kind of this aqua line. I do believe it's going to break through and finally hit this area. But just to give you an example, right? So once it finally entered that area, it was this candle right here, and it exited this candle, so 36 days. Okay, so now it entered this zone on this candle, and now it's sitting at, well, this is where it's opening now, but it's currently sitting right here, right? So look, 35 days. So there's a good potential chance that on Monday when stocks open, it's either going to be flat or it's just going to bust through that line, right? So you could see that within the span of 5 weeks. That's how long it took to get out of this larger area of consolidation in between these two channel lines. And same thing we might be seeing happening here. Now, pardon the coughing. I'm still under the weather. This flu is just not leaving my body. It's being recycled in my household. Like once one person feels better, the other people get sick. I mean, I have 3 kids, guys, so it's kind of tough, especially when one of them gets sick, because you know how gross young children are. When they cough, they don't cover anything. They lick their hands, they put them on your face, and it's like the house is a giant petri dish, you know. And it's not to say that we're not clean or anything like that at home. It's just unavoidable, right? Anybody with little kids will attest to the same thing. So yeah, that's kind of why I think flu season, it's months long in my household. It just feels like it's never ending. But anyway, so much for that. Let's dive back in. Okay, so what I wanted to show you as well, we had an imbalance form on Tuesday after close, or not imbalance, but a gap form on Tuesday, right? Where it didn't close off the next day, it came close. But I believe that after this dip that we had on Wednesday and Thursday, the recovery on Friday was pretty good, right? So you can see where we closed off on, where was it, Sunday, Friday, okay, so Monday, where we closed off on Monday to where the week ended. Realistically, it just went up about, what, 100 points, okay? Not too shabby, but when we drew a fib line, or sorry, the fib, oh man, my brain's not working. Fib retracement, okay? We drew it from this low to this high right here. You could see that after hours when a lot of earnings came in on Thursday afternoon, which ones were those again? I believe it was, Facebook was the day before. I believe this one was Amazon? I'm not too sure anymore, honestly. I forget which one it was, but one way or another, the market ended up dropping based on earnings from 1 or 2 particular companies on the 27th. I do believe it was Amazon, actually. Okay. And then kind of just wicked off that 618 here after hours, and then started to recover and decline on Friday. So best thing that I want to explain, it's any of these drops, they're kind of forced plays, you know. It has to kind of come back at one point and grab whatever positions were left in this area. As you can see, it made a low right here. I'll just try to grab that off because I drew too many things. So anyway, this low position right here, you can see at the crosshair, and then it drops slightly lower right here, and then start to climb. All right, so one thing that I noticed is where this gap came very close to finishing it off on Friday. However, I do believe that this gap will close either Monday or Tuesday. Monday could be a consolidation day, and Tuesday I think we could have a breakthrough. So we have interest rates coming out for USD this week, projected going from 3.25 to 4%. So that's a big interest rate hike. All right, now we've seen previous interest rate hikes where market volatility has spiked and then corrected itself and just got obliterated the following day. All right, so based on a 0.75 interest rate hike, this, excuse me, this is kind of what I project to happen. Okay, it'll slightly go up, interest rate hike comes in, shoots up like crazy, and then drops like a rocket ship afterwards. Right? Kind of seems to what happened in the past, right? And this might be a very strong push, maybe 500 or 600 points in 1 or 2 days, just to close off into this target area and then start to bleed back down. Now, what I predict will happen, it's not gonna hit the peak right here and then start dropping immediately like it did on the fourth leg right here. I believe it's going to be something more to the tune of number 2. Whereas you see it kind of hit there and then stayed there for about a week and then started to bleed and then go sideways and then down and then sideways for a week and then down and then sideways for 2 weeks and then down. Right? That's what I predict was going to be happening on this current leg that we're on. Going from 5 to 6 might be sharp. Going from 6 to 7 will be slow and painful. Excuse me again. So when I get into this area here, even when it starts getting into this box that I drew, this was based on a 618 retracement off this peak right there. Once I get in there, I'm going to stop buying positions. All right, currently I'm comfortable getting some calls or taking some short-term swings, but once it enters this box, I'm going to stop. Once it enters here, I'm going to be selling all my positions. Okay, that is my personal take on what's happening right now with Nasdaq. Okay, and as you can see, this high line of 12,733. If I go right there, 12,733. It's slightly higher than where my target box is, but that is kind of where this supply zone was set, and the gap wasn't closed before. I don't believe we're going to be heading to that gap. I think maybe the highest it'll go is maybe 12,600-ish, right? And 12,600 is just a little bit above my target box, right? So one way or another, this has a lot of spots already where it might just peak off and drop down. It could potentially close the gap or close both of them. I just don't see it going much higher than that. Okay, so somewhere around this imbalance where we had, it's going to be where we reverse. I just don't see it going all the way and closing both gaps. One, potentially, maybe not even any at all. Okay, so particular stocks now in this case. So Apple, good earnings. I mean, it's climbing. It's much higher than the rest of the stocks are. Okay, so I would say a good potential retracement for Apple. If we take a trend-based fib extension, we can see that potential lows next time around will be there. But if we go for the new highs, right? Let's take a look here. When we go with something, whoops, wrong one. When we go something like this, right? It kind of peaked off that area. Maybe it's just going to go a little bit higher. So honestly, the fib-based, trend-based fib extension isn't really going to work for Apple because it's overall it's kind of been going sideways for the last year, right? As you can see, where October started off in 2021, it's kind of where October started off in 2022, right? Almost the exact same spot. So they do have a much stronger chance of keeping the price where it is. And if we draw a ray from all the peaks, you can see how, I mean, it just kind of crossed it. We might be seeing another peak right around 171. Maybe 172, and then it started to drop back down. Apple is usually a safe bet by comparison, right? Amazon, so 6.8% in the negative. It's too bad though, because after hours is really where the price dropped to. I think it went all the way down to like 89 after hours, but it recovered before market opened on Friday, right? And it's kind of a bummer, because when it goes that low, I wish I could scoop some up around 88, 87, but there's just no chance, right? Like, majority of retail traders can't really do those stocks after hours unless you have a gigantic portfolio. And it's just so happens mine is not that big yet. So it is what it is. Even buying it at the open would have been pretty good at 97. And I do believe this gap is easily going to close off before the climb for Nasdaq is finished. All right, Carnival Cruise Lines, that's been a favorite of mine. And again, what I've seen is that this little gap has closed at earnings, and it's sort of getting back up to those levels. I do believe there's still a push left for Carnival to keep going up. $9 is still a pretty good bet, especially when my average has been 7. So it's still a 26% increase. It's been rather nice. And just to show you that, let's go there to there, right? So it's about 27%, 26% increase, right? Looking pretty good for the short term. And I do believe that there's still a growth for this to go to possibly 10 before it drops out. But as you can see, when everything else is gaining about 1 to 2%, Carnival is slightly higher, right? Caterpillar had their earnings. That's why they kind of shot up day after day. So they did well. But Carnival, it still has some juice left. And don't play it out just yet. I know that they are in deep doo-doo based on prior earnings, but you need to understand cruise line overall has been, not just Carnival, but all of them. They've been in terrible waters ever since COVID was announced, right? They tried to get back to cruising in mid-2021 once all the vaccination stuff started being released. But it still wasn't as popular as it's going to start getting after things cool down. So I would say overall this is going to be a very long-term hold. Short-term, I could see selling around the $10 area, dropping maybe back down to $7 or $8, and then picking more up and holding for long-term. I think that'll be the final drop. Okay, so COP, right? Like I said before, grabbing it around that 80, or was it $84, $85 mark has been great. Holding it for 3 to 4 months at this point would net you a 43% increase. So COP did very, very well over the last few months. I snagged more shares in Frontier Lithium. I just have a good feeling about this company. Like, it hit its lows right there. It's a good potential that it is doing a bit of a retracement right now to the 618 zone, and I mean, it just kind of hit the 50%. It started going lower. Good investment long term. I don't see it doing very well in the short term, just because they don't have any earnings to report, right? This is still everything is still kind of in the survey mode. They don't have equipment extracting product yet out of the ground. Google was another one, right? I think Google and Amazon had earnings on Thursday. That's what made it drop. So again, picking up Google around $92, that's fantastic. I mean, we know Google's not going anywhere. Good or bad earnings, it doesn't really matter that much, right? Like, look, it's so minuscule, it really doesn't matter a whole lot. Right, when they're in the negative, it's barely a percentage as far as revenue. Like, they lost revenue in that one and surprised earnings. That's why it dropped so hard. But Google's not going anywhere. YouTube's not going anywhere. Like, they're the 2 biggest platforms on the internet right now. And it could possibly be that advertisers are finding multiple different types of platforms to push products on now. But again, it's one of the things that it's a staple in our society at the moment. There's really not very good, not strong alternatives anyway. There are all alternatives, but they're a lot less popular. All right, so long term, I still see Google recovering and doing well. And let's see, I missed DocuSign the last time, right? Like I said, around the $47, $48 mark was great to pick up. It even dropped as low as 43, 42 around there. And then, yeah, so it's still just kind of hovering sideways. So personally, I mean, I did buy into it, but because it hasn't made very strong gains compared to what Nasdaq looks like over the last 2 weeks, I'm like, you know what? I'm not as comfortable holding this one long term. I'd rather put my I'd rather put my money into something that has better short term growth, right? Even a Tesla, like they had a surprise earning that wasn't, what was it here, where like surprise and revenue was down, but overall, I mean, it was kind of pointless for it to drop that low, like down to $198 a share. I mean, that's kind of a steal because it's already gotten up $30 a share since that point. So look, just as an example, right, 15% in 4 days. Like, what can you say about that? That's really good, right? So my short-term holds. Um, oh, and Meta. That was the other one, right? That was the one that. Where did Meta go anyway? Did I have it down here? It should be in alphabetical order. I'm not sure what is going on here. All right. Well, that's interesting. Let's add Meta. Meta platforms. There we go. And we'll put that back where it belongs. Right here. Oh, it's under Facebook. Yeah, whatever. Close it. So Meta, right? Earnings. What did we have here? Earnings. Oh, not too good per share. Oh, but surprise revenue still. So why did it drop in shares, in share value? Well, it's because Mr. Zuckerberg is putting all his chips into the metaverse, which as of right now, it's a big dud. So that's kind of why. I mean, the guy's doubling down, and it's really hurting investors at this point. But again, I snagged it up around $97 a share, and there's just no plausible reason it's going to stay this low. Like as you can see on the higher time frame, right? It's the lowest it's been since, where are we at? 2016, right? Even, yeah. So it made the lower point right here in Monday, February 8th of 2016, right, that week. So I definitely see this recovering. It might take a little while, but for it to sit this low when this platform is very well established, I mean, it's kind of silly. I have a feeling that it's going to recover, even higher potentially than the 129, 130 per share within this next push. But yeah, I mean, that all really depends on how the retail market feels about it as well, because investors seem to be jumping ship right now. And then, yeah, any other ones of note, I would say Roku, even though they've dropped off pretty hard. Um, it's been more consolidation over the last 2 weeks. I'm not too excited about that. But as you can see, my overall low target is the $36 range, 35, 36 around here. So that's where I'll snag up some more. Progeny did very, very well on Friday. They're very resilient as far as drops in the market are concerned. No news happened, and yet it gained 6.5%. So that's pretty interesting. And then there was Pinterest. It showed positive earnings and revenue. So that's why it shot up 13.75%. So yeah, that's kind of stocks in a nutshell and the Nasdaq. So again, I'm about, where's the Nas? Right here. I'll pop it on. I'm still about, let's see, from Friday's close, approximately 900 to 1,000 points away from target still. And when interest rates get released that high, I have a feeling that's going to be what does it for Nasdaq. It'll spike up the one day and then start tanking the following day, like it has historically, right? And to give you an example, check out August 26th or September 13th. I think September 13th was the last time it was released, right? And then you can see that's where it dropped off 700 points, almost before and after hours, right? Like from the top of the wick to the bottom, that was 900 points worth of movement. And that's what we're going to be looking at. Another one of note, May 4th, right? So if you take a look at this one, open and close, almost 400 points, and then open to close, almost 600 points down, right? So if I don't want to go online right now to show you, but research those days, see what happened when interest rates came out, what the reaction of the market was, and then you'll have a good understanding what to expect. If they start dropping right away, again, I think the day that the interest rates get released is going to be volatile for about 30 minutes. Then it's going to climb, and then the next day it's going to drop like a rock, based on history, right? So anytime you see these big red bars, do your research. Check it out. Anyway, guys, thanks for tuning in, and I'll see you next week.